Welcome everybody to the Asian Express by In the Money Stocks. My name is Nick Santiago. I'm here with you for another week covering the Asian markets. This is the first month of July, so it is a new quarter beginning. I like to start off with the Shanghai Composite, and what you're going to see here is last week the Shanghai made a very nice big little tail coming off the lows. All of this was on the back of a lot of central bank speak out of the People's Bank of China saying that they will increase liquidity. If you take a look at the daily chart, which I believe is very important at the moment, you'll see that you had a big bottoming tail. Then finally on Friday there was some follow through to the upside. Now, while the market looks very poised for a bounce here, what you want to realize is that it is in a severe downtrend. It's trading below all the major moving averages, puts it in a very weak technical position. If this low by some chance at around 1850 on the Shanghai Composite is breached, it looks like price will ultimately go down to around the $1,722 level. So again, there is severe downside should this level get breached. Right now, you got to look for a little bit of a short-term bounce, but I would not be surprised to see some type of a pullback tonight in the Shanghai market, and that goes for most of Asia. For the most part, when you look at what has taken place in China recently with the economic slowdown, it has affected places like Australia, Japan, Singapore, South Korea, even Taiwan. The Chinese are mainly exporters, but believe it or not, to those other nations, they are importers. So you have to realize that Japan will not sell all that many cars if there's an economic slowdown. You'll have Australia, which is a commodity-rich country, will not be able to sell so much copper and iron ore and things of the such. So Japan is very important, really, to all of the nations that are in the Asian realm. So I think traders really want to focus on that, and we'll see how this all plays out going forward. But right now, the Shanghai, I should say China, has caught a little bit of a bid. But if this level gets breached, it's going to immediately trade down to around 1722. So traders should be well aware of that. Right now, I guess over the next trading week, we could give the Shanghai a little bit of an upside bias since price did close above that bottoming tail high from last week. So again, but don't take it for granted. While we'll give it a little short-term bias for the week, doesn't mean the entire week is going to be straight up. I think tomorrow or tonight there could be some problems in the Shanghai, and we'll see if that does happen. There'll also be some economic data released this week, so you're going to have to watch for that each and every night. But I think the days of 8 to 9 to 10% growth, GDP growth in China are over for the foreseeable future. Let's take a look at the Nikkei 225, which I believe is probably just as important these days as the Shanghai is. And you'll see that this has had a very nice bounce recently. Decent little move to the upside. Closed up around 13,677 on Friday. I'm not sure if we should make too much out of it going forward. We'll have to see exactly how this plays out. But so far it is off the lows. There's a big level here of support at 12,000. Should it come back down, and at the moment going into next week, we could probably give it a slight upside bias. But again, I wouldn't rule out early weakness or weakness early in the trading week as soon as tonight for the Japanese market. But we'll see how that trades out going forward. The other thing I want to point out is that if you look at the weekly chart here of the Nikkei 225, what you'll see is this had a very sharp decline. Basically a 3-week crash for the most part, where you went from basically 16,000 all the way down to 12,500. And now you're getting just a nice rebound. But if we get pattern here, this could be another sell pattern to the downside. Then 12,000 would be tested, and then ultimately we couldn't rule out a move all the way down to 10,000. So that is still very much in the cards. Although this is bouncing, that's a normal bounce, but that sell-off was quite sharp and quite severe. Again, another week or another week or two, the pattern should start to reveal itself what direction this market is going to trade in. But right now, we'll give it a slight upside bias this week, but I would expect weakness on Monday night in Japan. All right, let's take a look here at the BombaySensex index, which is India. This is a very important index because it's the second largest populated country in the world. In fact, it may be even more populated than China. But this had a very, very good bounce last week, giving a little higher low on the chart. So this was a very, very good bounce last week, and this index could have a little bit more upside to go this week. If you take a look at the daily chart, you'll see the 50 moving average is coming into play at around 19,500. I think that's going to be a significant resistance point going forward. But another big level I think traders are going to have to watch for ultimately will be around the 19,700 level. And I'll just draw that line in for everybody so everybody could get a good glance of it. But around 19,700 is really going to be a big, big sticking point ultimately for this market. So we'll see if the BombaySensex index can get above there. But there should be very, very good resistance. In fact, I'd almost look for a pullback at that stage of the game. Even where we are now with the 50 MA right here at 19,500, there could be a pullback in the works as well, as this was an enormous bounce. From 18,500, you almost got a 1,000-point bounce here in just a few trading sessions. So very, very good move to the upside. But again, I expect the market to stall out around 19,700. So look for a pullback there, and then we'll see what the pattern gives us on the charts next week going forward. I'd like to take a look at the Korean markets, which are very, very important. They've bounced up quite nicely like everything else. Again, from my vantage point here, what I'm looking at would be a resistance level, basically, if my math is correct, right where we are. We do have some good resistance. Then we'll have a little bit more at around 1892. I think traders want to watch for that. That'll be right around this 20-day moving average. There'll also be more resistance there. You can see a lot of chart resistance, prior pivots, and then big resistance around 1921. So keep that on the radar. We'll pull that one up right there. You can see 1921. There's going to be another resistance point at that stage of the game. Looking at the next index that we want to cover would be the Hang Seng. Okay, the Hang Seng is independent from the Shanghai. It will trade in its own little world. So the two, while they're in the same country, are not completely related. The Shanghai index is different from the Hang Seng. And what you can see here is that from this 23,500 level, this went all the way down to 19,500. It's getting a very, very nice bounce. If this low gets taken out by some chance over the next week, then the price can ultimately go back down to around 18,000. I don't foresee that happening, but hey, you never know. Stranger things have happened in the market. When I look at resistance levels for the Hang Seng, what I do see is that near-term resistance would be around 21,000. I think everybody should watch for that. You're going to have a big gap window there at around the 21,000 level. Also around 22,000 would be the next big spot. Make that even, just around 22,000. So right underneath these moving averages right here, that would be the next big level. So we got two important levels right now to watch for: 21,000, ultimately 22,000, and really around 21,500 would be an intermediate level. And you can see all three spots are the next big resistance levels. Watch for the Hang Seng. Each level can cause a pullback in the charts. And again, if this low is taken out, the next big level is really down to 18,000 on the downside. But right now we're going to give it a slight upside bias this week. Watch for weakness early in the week, beginning on Monday. All right, let's take a look at Taiwan. We want to take a look at the Taiwan market because this really caught a huge catapult bounce. I mean, it was just tremendous. You could take a look and see that the weekly 50 moving average was tagged. Just a major reversal bar to the upside. So Taiwan is showing very, very good strength on the weekly chart with that rebound. Also, the daily chart has caught quite a bid. The resistance level we'd have to look for right now, if you're looking at the Taiwan market, would have to be somewhere around 81.40, 81.50. Hard to pinpoint it to the exact penny, but it'll be somewhere in this 81.40, 81.50 level. So watch for near-term resistance around there. I would not rule that out being hit this week. Also, again, with all the other Asian markets, we could look for early weakness beginning on Monday, in my opinion, but things should subside maybe Tuesday and Wednesday. Let's take a look at the Australian markets, which I think are extremely important and very, very closely tied to the Shanghai Composite. Again, when the Shanghai puts in a little bit of a low, we can expect Australia to move up as well. I would have felt better about Australia had it come down to this 45.50 level, but it did not, and it's still below this last pivot right here, going back to June 20th. So this is still in a vulnerable position. I think traders want to be a little bit careful with Australia right now. It is really dependent upon China right now, and you'll also see this is also moving sideways, holding the 50 moving average. But if it builds a base here, that is ultimately going to go lower. So while it can bounce up this week, be a little bit careful. And like everything else, be careful tonight, Monday. There can be some weakness in the ASX going forward. I want to take a look at the Singapore Straits Times, and then we'll end everything here. The bounce here has been okay, but it hasn't really been quite as strong as some of the other indexes that we've seen. It's been a good little bounce, but the Singapore Straits Times is still below the 50 and the 200 moving averages, which put it in a weak and vulnerable position. Now, the one good thing here is that it has held up pretty well at the moment, not really taking out these support levels from 2012. So you got to give it a little benefit of the doubt. But if this level gets taken out, it can easily get down to around the 200-day moving average. You have a little bit more support and then much, much lower. So be careful. Singapore Straits Times, while it's holding up, is not showing us a ton of strength at the moment. I do think it can bounce this week. But again, weakness tonight along with everything else in the Asian market going forward. That's pretty much everything that I wanted to cover. I think we've covered it all for this week. I want to just thank you all for tuning in. And we'll see you next Sunday for the Asian Express. Take care now.